All right, good morning, everybody. My name is Steve Mahoney. I am a mentor with the Greater Hartford chapter of SCORE. I'm delighted today to be joined by Meredith Messenger, who is the founder and CEO of Insure, professional service and insurance agency located in Hartford. Meredith is going to be presenting on this topic, which is very important for all business owners, which is how to decide what insurance is right for your business. I do a lot of mentoring with clients in SCORE, and this is a topic we always discuss. How do I decide what kind of insurance to get? Where do I go? So we hope you find this helpful today. Before we jump into the content, I wanted to spend a couple minutes and talk a little bit about SCORE and what we do. SCORE is a nationwide organization made up of about 10,000 volunteers, and our sole mission every day is to help small business owners. We provide one-on-one mentoring services. We lead and teach webinars and workshops like this one. And we also have a number of resources on our website that can help you in running your business. The best part about all of SCORE's services is that they're free. So if you're interested in learning more about what SCORE has to offer, you can find out more at score.org. You can sign up for webinars, you can sign up for mentoring services. And if you are interested in that, we have mentors from all walks of life, all sorts of experience in industries. Chances are, if you need help in running your business, we can provide that assistance for you. A few housekeeping items before we get started. This session is being recorded, and we've muted all of the microphones to prevent any background noise, but we would love to hear from you. So we want to hear your questions. And if you would like to ask a question, you can do it two ways. At the bottom of your Zoom screen, you should see a chat icon. You can click on that and type your question. And there's also an item to raise your hand. And if you do that, I can unmute your microphone and you can ask your question that way. So with that, I will turn it over to Meredith. Meredith, take it away.
Hey, good morning, everybody. If you joined a little early, you might have heard us chatting. I am a little under the weather, but I am trying to bring all the energy that I have to you guys to talk about the exciting topic of insurance, right? And so before I kick that off, just a few things. Obviously, I don't have any insight as to the details of each of your businesses or what you do, or, all the finite things, little minor things that we use to tailor advice to specific situations. So my legal team, I am a risk manager, so I have to say these things. My legal team would kill me if I didn't say this is general advice, right? So general topics, it may not fit your business exactly. So at the end, we'll talk about how to tailor insurance to your specific needs and who you could talk to for that. But I just wanted to say this is just for general informational purposes. And I wouldn't be my normal risk management self if I didn't say that. The next thing I just want to hit on is I'm also a SCORE client. So if you were here a little bit earlier, I was chatting and talking about some of my SCORE mentors. So if you're not working with SCORE now, I would strongly encourage you to do so. They've been very, very helpful for my business. Even if you have business experience, there's always places and things that come up in your business where you're like, I'm not really sure what to do with that, or how do I navigate this question or this nuance, right? And SCORE has a tremendous network of resources that can help you without hurting your cash flow. So if you're like me and you're kind of scaling a business and cash flow is important, it's an excellent free resource that you don't have to worry about quality with. So highly recommend SCORE. All right, so a little bit about me, if I can make this work. Oh, there we go. A little bit about me. I'm the founder and CEO of a boutique risk management firm based out of Hartford, Connecticut. And what that means is we help small businesses avoid hidden risks and recognize growth opportunities in their business. So y'all can hit your 1 year, 5 year, 10-year anniversaries, right? Because we all know that as a business progresses through its first year, there's risks that it faces that threaten, its viability. And then certainly as you get into your, 3 and 5 years, and you're scaling your business, you face unique risks. So my firm helps you identify what those risks are. And then we put tools and resources to work in the areas of operations and human resources that can really help reduce the risk that your business faces. The founding principle of our business is our mission around providing more opportunities to minorities, particularly women, to come into the financial services space, insurance, and as business owners and leaders. And so to support that mission, we donate 20% of our profits annually to our charitable organization that then identifies women who want to come into this space. And we supply them with the capital, the education, the support that they need to not only launch, but be successful in financial services. So working with us is not just an investment in your business, and it doesn't just help our business, it actually helps other minorities who wouldn't ordinarily have access to opportunities gain them. So we're really a mission-led organization. I'm really proud of that. I'm always happy to talk about that. I've been in the space for over 15 years. Collectively, our team has been in this space for over 45 years. So we've got a whole wealth of experience, both on the small commercial side, small business side, as well as the business insurance side. And we'll talk a little bit more about that business insurance piece today. So as we kick things off here, I think it's important to, let me just scoot this over. I think it's important to kind of level set and acknowledge what we typically think of when we think of insurance. If you're like a lot of my clients or a lot of my colleagues or friends, insurance is not your favorite topic. It's often thought of as confusing or complex or just sort of like a necessary evil to do business. But what I really want to be able to impress upon you today is that insurance really can be used as a business tool to address many of the stressors that your growing small business or soon to be launched small business may face. One of the biggest things that can impact a business's success is loss of income. And so as you like all of us do who own businesses, lose sleep over what would happen if an adverse event like a lawsuit or a fire or a theft or any of these other things may happen in your business. What would happen? We all lose sleep over those things. Like what would happen? What impact would a lawsuit have on the cash flow and reputation for your business? How do you obtain and keep financing in different contracts that allow you to grow in place? And then the ever-present talent war, right? How do we find and retain the best talent? All of these stressors really can help be alleviated or addressed through an effective insurance program. And so what I really want to impress upon you guys today is to try to change your perspective of insurance from being a necessary evil or this overly complex thing that just needs to be dealt with to leveraging insurance as a business tool, because really it exists, and when done correctly, can help protect your cash flow, your reputation, can help create sustainable and predictable performance, even when things aren't going well in your business, even when you experience a loss. It certainly reduces the risks associated with running your business, which we'll talk about today. And believe it or not, and this is something that a lot of small business owners forget, but the right insurance programs can actually help you attract and retain talent, and they should be considered as part of your overall talent strategy if you are looking to grow your business through hiring. So with that, I'm hopeful that we can just kind of let go of our initial thoughts around insurance and maybe some of the negative assumptions or negative perspectives that we have in insurance just for this presentation, and help and really try to view how insurance can help us as a business tool, not only control our risks, but perform better than we would have without it. So I'm going to take a breath with that. Everybody think about letting go of the negative perception that they may have in their mind now of insurance. Okay, so let's get into this. So before we really get into the meat of insurance coverages, let me scoot this over, of insurance coverages, I just want to go through a quick primer on what insurance actually is, because we all know that we need to have it. Most of the people that I work with and the clients that I work with really don't understand conceptually what insurance is and how it works for their business or in their personal lives, even in their home and auto or tenants and auto insurance or their umbrella insurance. And so I just want to take a moment just to kind of level set here to make sure that we're all kind of speaking the same language. So insurance is built on the concept of indemnification. Indemnification is just a fancy way of saying it's a contract between you and the insurance company, which we'll go over in a second, that puts in place certain protections for you and your business in the event of a covered loss. So indemnification basically says that they are going to, the insurance company, in exchange for your insurance premiums that you pay, is going to financially make you whole after you experience a loss that's covered in the insurance contract. So what it means to be made whole is you're not going to come out ahead of where you would have been, but you're not going to come out with a loss from where you would have been. So each of the coverages that we're going to talk about today is meant to provide indemnification in the event of any of the different losses that may happen and that are outlined in the insurance contract. So indemnification is the basis of all insurance policies. You will be made whole under the terms of the contract that you have in place with the insurance carrier. And on that topic, oftentimes I find that business owners and personal insurance clients as well don't really necessarily understand the difference between an insurance carrier and an insurance agent. So the insurance carriers are the companies that write the insurance contracts, that create the insurance coverages, that are guaranteeing that in the event of a loss that is outlined in your insurance contract, they are going to pay to indemnify you, right? So they're going to pay to make you whole after that loss. Insurance carriers are companies like Travelers, Safeco Insurance, Utica National, Allstate. Those are insurance carriers. They're the ones who actually create the insurance products, generate the insurance contracts, create the pricing for your insurance policies. Insurance agents are licensed representatives of those insurance carriers. And so I'm an insurance agent. I'm also a risk manager. We, as insurance agents, are authorized to issue policies on behalf of the insurance carriers. And at the end of this, we're going to talk about the different types of insurance agents you can work with. So I won't spend a lot of time on it here, but we basically act on behalf of the insurance carriers in terms of offering insurance products to folks like you guys. To our business owner clients and our personal lines clients. So we're authorized to write and distribute those policies on behalf of the carriers. What that means is that your insurance agent or the agent that you're working with isn't necessarily responsible for the pricing or the generation of the contracts or the claims or the coverages. We're responsible for navigating those things on your behalf as a client. So as an example, if you were to have an insurance claim, and you called Travelers or whomever, it doesn't matter, your insurance company to report that claim, we help you navigate the claims process as insurance agents, but ultimately it's the insurance carrier's job to investigate the claim and pay out the claim. So we act as the intermediary, we act as your sort of advisor and guidance point in terms of navigating your insurance and your insurance needs, but the insurance carriers actually issue the coverages and the policies and things of that nature. I get a lot of questions around what generates the cost of insurance. So how can someone understand why their insurance costs what it does? And so in the next section, we're going to talk a little bit more about this, but the cost of insurance is generated, for at least at first initially, on the concept of pooled risk. So insurance works in terms of finding similar characteristics between risks. So you guys, your businesses, your industries, your different things, and pooling those risks together. If the losses in a group of pooled risks, so a group of insureds, is high, the overall impact on insurance premium is going to be the raising of premiums, right? So you may have a particular type of insurance coverage that is experiencing significant losses across the entire ecosystem of insureds that exist in that pooled risk of business. And so in totality, the insurance premiums are going to go up for the entire risk. The other factors that go into insurance are the nature of your own risk characteristics. So what industry are you in? What types of insurance do you need? What type of experience do you have? And we're going to talk about those things a little bit more next. But so the cost of insurance is determined by the insurance carriers based on the overall risk characteristics of you and everybody else that sits in that pooled risk, as well as your own individual risk characteristics. So what do you do? How do you do it? Do you have past claims? How much insurance do you need? All of those things go into factoring the cost of insurance. Another question that I get really often is if insurance is tax, if you could receive a tax deduction on your insurance. And I am not an accountant, so you're going to want to refer directly to your accountant on that. But in general, insurance premiums paid are tax deductible. So yes, so I just wanted to hit on that. It's a question that comes up pretty frequently. And then lastly, as we started to talk about in the slide before this, insurance really is a business tool. It's not a necessary evil. So if you think about insurance from the perspective of if you didn't have it or you don't have insurance now, what you need to do in order to make sure that your business stays viable and make sure you don't go out of business in the event of a large loss or a lawsuit or something of that nature is maintain enough capital. So have enough money in your operating account, have enough money in your bank account to be able to cover the cost of any of those types of losses should they occur. So if you think about a typical liability loss as an example, maybe your service provider and a client isn't pleased with the advice that you've given them and claims that that costs them some money financially. The average cost of just defending that claim is over $100,000. So in that case, you would need to have $100,000 in your bank account to cover the cost of your defense. So that means you would always need to have a certain amount of money tied up just in the event of a loss so that your business doesn't become insolvent, so you don't go out of business, right? So insurance eliminates your need to have capital, to have money tied up in your bank accounts in order to be able to continue to move forward. It also allows you to reinvest in different places in your business, right? So if you're able to limit the amount of financial risk that you're taking in some areas, you could take that money that you would have had in your operating account and invest it back into your business in different areas. So in a lot of different ways, insurance really is a business tool. It's not just a necessary evil. It's not just something you have to have in place in order to move forward in some cases. So again, it's really meant to make you be able to manage and reinvest funds back into your business more effectively as you're growing. Let me just check the chat because I do see something in here. Let me make sure there's no questions. Oh, this is a long question. Let's see. I'm looking to invest, Uchenna. Hi, Uchenna. I'm looking to invest in the purchase of real estate investment, residential property for commercial purposes, i.e. for rent. The LLC partnership will purchase homeowners or general liability to cover property, any contents that might belong to the ownership. How can I obtain information on the value of the structure and property in order to have an idea of the amount of policy coverage and its approximate limits? So that is a process. So Uchenna, that is part of the process of working with an insurance professional. They are going to go and they're going to research the property value for you, and the insurance quotes that they're going to obtain are going to assign a particular value per square footage for that total property. And that's going to be what feeds into the total cost of your property insurance. One of the factors that goes into the total cost of your property insurance. Hopefully that helps. We do that using a number of publicly available data sets, like the town cards that exist for every property in the state of Connecticut. And then that will also tell us the different types of safety mechanisms that may be in place in those buildings. So is it sprinklered? Is it not sprinklered? What type of building construction is it? All of those things factor into the total premiums and the total values of the property. Hopefully that answered your question. It's a little complex. Essentially, we pull all of the information on the makeup of the building, whether there's been improvements, what type of heating and air conditioning there is in there, and then that will create a total replacement cost. So if the building were to burn down tomorrow, how much would it cost to rebuild it? That's
Meredith, is that similar to kind of an appraisal process that you go through with kind of obtaining a mortgage on a house?
It's similar to appraisal, except that appraisals are based on market value. So how much would you make, or how much would the property sell for in today's market, which is very different than how much would it cost to replace it. How much would it cost to replace it, like with new construction? So, and that's actually a really good question because that comes up really often in working with my clients. They'll say, well, I only paid, let's say $100,000 for this building. Why is my replacement cost, $250,000? And it's because of the current cost of labor the current cost of supplies, which is through the roof right now. So one of the big issues with replacement costs and right now, or building in general right now, is the cost of getting supplies. There's a shortage for building supplies. There's a shortage of lumber, which is making the cost of those things skyrocket. So it's similar in how we evaluate it, but it's not, the concepts are different. So appraisal value is what it would sell for. Replacement cost is what it would cost to rebuild the entire structure should it all be destroyed tomorrow in some sort of catastrophic event. So hopefully that answers the question.
Great, thanks.
That actually comes up a lot. That I should have put that in my frequently asked questions. Thank you for reminding me. And you try to certainly let me know if you have additional questions on how I answered that as well. I'm happy to take a deeper dive into it either at the end here or even just one-on-one. Okay. So moving into the types of coverages, what types of coverages and how much do you need? So before we get into the different types of coverages that exist, well, the main types of coverages that exist for startup businesses, there's 4 main areas of questions that really determine or help determine how much insurance you might need. And so the basis of all insurance programs is going to be your industry, the experience that you have in your industry, your location, and the nature of your operations. So let's start with industry. So a manufacturing company has a very different risk profile than, say, a retail bookstore, right? 2 very different industries, 2 very different types of coverages that they need. So some industries are considered more risky than others. And there are some that are obvious. If you are a arborist and you're constantly going high up into trees, there's a danger of things falling on you or people or property damage. That's clearly a much riskier industry than, say, at least from some perspectives, than, say, from an accountant, right? So different risks, different types of risks, and industries, some of them are considered to be more risky than others. Now, if a lot of you on today's call are thinking of starting a business or have just started a business, one of the big factors that an insurance carrier is going to look at is what your past experience has been in that industry. So as an example, if you were a assistant manager in a bakery and now you're owning your own bakery, you did that, say you were an assistant for 5 years and now you want to own your own bakery, the insurance carriers are going to consider you to be more experienced than, say, somebody who was an insurance agent and now wants to open a bakery and has very little or no experience in that area. So experience does matter even when you're just starting up. It matters in terms of how the carriers view the risk that is associated with your business, the risk of lawsuits and liability, your ability to manage the business, that sort of thing. Where you're located also has a very large impact on your overall insurance and what type of insurance you need. A home-based business versus a physical space, which we'll talk about in a second, clearly carries different risks with it, right? So where you're located does have an impact on your overall insurance program and the types of coverages that you're going to need. And then your nature of operation. So how do you do what you do? That's a really important piece of what type of insurance packages you need. And I'll get into that into some more detail when we go through the scenarios, but like, how are you set up? If you're a bakery, are you baking out of a home kitchen, like a cottage industry? Do you have a commercial kitchen set up? That's really going to impact the different types of coverages and programs that you're going to need to start to explore. The next question that you really want to ask yourself, and your insurance agent should be asking you, or whoever you work with on your insurance should be asking you, is what structure, size, and stage are you at as a business? So the first question really drives at what type of coverages do you need? The second question drives at how much of those coverages do you need? So when I say structure, what I'm referring to here is what type of legal entity are you? If you are a sole proprietor, which I'm not a lawyer, but you should talk to your lawyer about your legal structure. If you're a sole proprietor, more of your personal assets are at risk should you experience a loss or a lawsuit. so liability case. In that case, you're going to need higher insurance premiums to help protect some of your personal assets. Whereas if you're an LLC or a corporation, there's more of a barrier between your personal assets and your business assets or business lawsuits. So structure is important and should be considered in your insurance program. Your overall size. So one of the things that your insurance program should consider is how much do you have in revenue or planned in revenue? How many clients do you have? How many assets or the level of assets that you have? And then what stage of business are you? So are you pre-launch? Have you already launched? Are you a startup? Are you more in the scaling phase? All of those things kind of matter when you're considering how much coverage you need. The third question is an important one, and one that most of the entrepreneurs that I start working with don't understand or consider, don't have an idea of. What's required for you to work and get paid? So there are insurance requirements that you need to consider as you're thinking about your insurance programs. So some requirements are mandated by law, which we'll talk about in a second. So you have a certain type of business, you do certain types of things, or you have employees. There are coverages that by law you need to have in place, or else you're going to get slapped with some pretty terrible compliance fines and or closure. Okay, you'll be on the naughty list in the state. And after a while of you being in the non-compliance list, they will close down your legal entity, and you don't want that. But there's another level of requirement too, in terms of thinking about your insurance programs. Many of your contracts that you are going to want to sign, especially with larger clients, are going to have levels of insurance requirements built into them. So you effectively can't get paid until you demonstrate to them that you have the proper insurances in place as outlined in the contracts. And we'll talk about what those common insurances are in just a second. But many of my clients come to me at the last minute and say, hey, I didn't know that they had a requirement, an insurance requirement, and I can't get paid until I have it in place. And so best case scenario, that puts pressure on your cash flow because you can't recognize the revenue as you should be in the times you should be until your insurance is satisfied. Worst case scenario, you get stuck and have a really hard time finding a carrier who will give you who will place that coverage for you, and that draws out your contract and or cancels your contract. And you don't want either of those things. So you really want to be contemplating ahead of time what insurance you may need in place in order to satisfy your contracts. Another contractual obligation is if you're moving into any kind of commercial space. So very frequently, 99.9% of the time, your landlord is going to require you to have certain levels of insurance in order to satisfy your lease. So make sure you're reading your contracts, make sure you're showing them to your insurance agent if you're working with one. Make sure you know what your insurance requirements are so that you're not stuck at the last minute, or worse, stuck not being able to get the coverages that you already said you had. Which does come up sometimes. And then leases become null and void, contracts become unpayable. Those are not good situations. Those are not things that you want to have happen to your business. And then the last consideration, but an important one, is what's your overall insurance budget? So for those of you who have recently launched or are planning to launch, please start budgeting for your insurance, because oftentimes I'm working with clients who don't have a line item for insurance. And so what ends up happening at that point is there's pressure already on their budget. They're spending their money in other places, and they're trying to scrape together enough money for the minimum amounts of insurance that their business needs in order to be able to continue. And that's not a good place to be either. So you need to have a budget, a line item for your insurance. It needs to be something annually that you are accounting for going into the next year. And it needs to be a priority so that you're not stuck at the last minute without the budget to get the insurances that you need. So, oftentimes when we work with startups, one of our jobs as an insurance agency that specializes in startups is to sit down and say, okay, here are all the risks that we see for your business. And here are all the insurances that can help with some of those risks, because not every risk is insurable, but here are what we would recommend in the best world, like in the perfect world. Here's what we would recommend for insurance coverages. But here, let's look at what are the essential coverages. What can we fit in within your budget to make sure that you have at least all those essential essential coverages in place, right? And we'll talk about what some of those essential coverages are in a second. And here's a list of things that we think you should have eventually. Maybe you should start budgeting for these now, but they're not like as pressing as your top of your priority list. So it does sometimes become, as a startup, a conversation with an expert, right? Around, okay, these are the things that need to be done now. And these are the things that we should really focus on in phase 2 as your budget grows for your insurance program or as your risks change. So sometimes you have to make choices, but at the end of the day, if you're working with a really great risk advisor, they should be able to help steer you in the direction of what's most critical for your business in this moment in time and what can maybe wait a little while. So I'll stop there. What questions do you guys have before I get into like overall coverages? Those are the 4 main areas. Of course, we get into a lot more detail when we're working with our clients, but those are the 4 main areas that we look at in terms of really determining how much and what types of insurance you need.
So Meredith, it looks like Uchenna's got a follow-up to her earlier question here about the limit on the homeowners or general liability policy. I don't know if you want to read that in the chat.
Okay. With reference to my earlier question on pooled real estate investment, the limit on the homeowners or general liability policy cover is dependent on what it would cost to replace or rebuild the property in an adverse event. Yes, not general liability is a different coverage. So we're going to go over these coverages in a second. General liability doesn't apply to property insurance. So property insurance is just the building and all the things in it that would need to be replaced, whether it's a single residential home, pooled real estate, commercial real estate. The concept is the same. It's all of the building, all the things that it takes to make the building work, like your electrical, your plumbing, your HVAC, all that, and all of the contents inside of the building. So it could be equipment in the case of like a commercial real estate, right? Like maybe it's a restaurant. It could be, if it's a residential building, it could be, landlord property that's held in the building. Now, if it's a residential property that is going into this LLC, and then you're going to have tenants, the tenants are going to need to have their own individual policies that occupy those spaces. So 2 different things, but the general liability protects you in a different way than the commercial property insurance does. And we're going to hit on that in a second. But yes, you're always going off of replacement costs.
We also have a question from Priscilla. It's in the Q&A box. I don't know if you can see that there.
Yes. Hi, Priscilla. Okay, so you're a holistic health business. You've been in business for 16 years. You've had incredible difficulty getting property insurance that my landlord requires. Yeah. Okay, I carry professional liability through the organizations I'm certified through. Insurance carriers will not cover me because I offer mediumship. Feels like I'm being discriminated against. Okay. I have never had a claim and have an established reputation in my industry. Currently, I have a professional and general liability. I'm the only one who's covered under it, so it doesn't allow me to offer programs with other people in my facility. It also isn't covering my business property. Any advice on where to go? Yeah, come talk to us. These are one of those situations where we really need to talk through with you exactly what you're doing and how you're doing it so that we can come up with the best advice. One thing I will say is that what are considered to be like alternative industries. So let me just say this. Insurance is 5 to 10 years. The carriers are 5 to 10 years behind what's going on in like regular business practices. So they're very slow to change and update their policies on who they'll write. Like we call that underwriting. So a lot of times it takes an intermediary like myself or our chief insurance officer, Carrie, to really sit down with representatives from the insurance companies and say, this is what it is. And this is how we think it should be insured. Because you're not like a standard, what they would consider to be like a general typical risk, like a Main Street business, like a bakery or a bookshop or something that they understand and they know how to underwrite. So your particular industry is a little bit more foreign to them. It's going to take more effort on the part of an insurance agent to really look at what all your options are. There's almost always, it's very rare, but there are some times where there's things that cannot be covered by insurance, industry-wise. You may end up paying a little bit more because there's not a lot of other risks like yours. So the premium may be a little bit higher, but I'm confident that there's coverage for you somewhere. In my experience, 98% of the time we can find coverage for something. we just have to go other places, and it may end up costing you a little bit more. And then the conversation becomes, is the risk significant enough to pay for the premium that is being asked to cover the risk? And that's something that it's a conversation you have to have with your insurance advisor, and you have to feel comfortable with it. So that's how we work with our clients. We would have that conversation with you and say, okay, does this fit? How does this fit in your budget? And do we view the risk as being significant enough and probable enough? Like, is it high likelihood that this is going to happen to justify the premium? And then our job is to ask you, how comfortable are you with that? Are you comfortable taking that risk? Or are you not comfortable? Because ultimately the decision's yours. So that's how we would work on that. But it's going to take a little bit more of a conversation between you and one of our risk advisors to do that. Does that make sense?
All right, great. I think those are all the questions we have so far.
Okay, cool. So we talked about like what are the factors that go into determining insurance coverages. And there's two parts to that. There's what types of coverages do you need, and then how much, like what limits do you need in those types of coverages. So let's break out coverages just a little bit. I'm going to put this in completely normal person speak, okay? Almost every business carries at least some of the same risks. Those risks that are in this box are risks that almost every business will face, okay? So we have property insurance. As we talked about earlier, that's all your stuff. That's your physical location, like the building and the tenant improvements if you have one, your computers, your equipment. That is property insurance. And almost every business has some level of property insurance. Well, but I'm going to break that out in a second too. Business interruption, which basically says, hey, there was a loss, and it has to be a covered loss. So like COVID doesn't count for this. It's an exclusion on the policy, but it has to be a covered loss. Say there's a fire. Like that just happened down the street for me. There was a 4-alarm fire at a shopping plaza here. There's a fire. I am not going to be able to operate in my normal business for some amount of time. Business interruption will help you recoup the monetary losses of being out of business for some amount of time, or relocating your business for some amount of time. So if there were to be a loss and an interruption on your business, a covered loss and an interruption on your business, business interruption will help you cover what you would have taken in on revenue, and help you pay things like payroll and do all of those things that you need to do in order to keep the business going and alive while your normal operations are interrupted. General liability is the third coverage that pretty much every business really has an exposure to, which is injuries, damage to others' property, injury, third-party injuries. So somebody who's not part of your organization gets hurt while in your space or visiting you in a space, or you damage their property. Say you're a photographer and you knock over some of the videographer's equipment while you're doing a wedding. General liability covers those types of losses. So third-party losses that you're liable for. Slip and falls is a great example of this. It's a very common claim in physical spaces. Someone falls, you mop the floor of your store, someone falls down, they break their arm, they go to sue you, that sort of thing, okay? These three coverages are essential for small business owners, and they work really, really well together in a coverage called a business owner's policy. Sometimes people call it a BOP, but business owners policies provide a broad range of coverages to a variety of different types of industries, mostly in a fairly cost-effective way. They also often bundle in other types of coverages, like we can talk about in a second, to make it easier and provide more comprehensive coverages over a wide scenario of claims, right? Like provide coverage for a wide variety of losses. Sorry, guys, I'm losing my words here. Wide variety of losses. So those three coverages are something that almost every business needs to some degree. And they're in the box together, not only because they're important, but because you can buy a policy called a business owner's policy, which will address a lot of those needs and bundle in additional coverages in a fairly cost-effective way. Okay, so those are the foundation of most startup businesses' coverages. From there, we build it out additional insurance coverages that might be unique to the business owner's needs. So if you are doing any type of delivery, any type of transportation that supports your business, in some cases, even if you're using your personal auto often for business uses, you may need a commercial auto policy or a business auto policy. So that's something that you would want to discuss with your insurance advisor as well. Once you start hiring, there are specific insurance coverages that are both required by state and then really, really good potentially to have. So the second that you have an employee, you go from a solopreneur to more than one person working in your business. By state law, you need to get workers' compensation insurance. And so what workers' compensation insurance is it protects you and your employees in the event that they're injured during their course of work. So it provides benefits to you and your business in terms of providing liability protection. So you're providing the coverage that they need to get the help that they need from their injuries, to rehab from their injuries and get back to work. In exchange for that, you're given liability protection. So it protects you from lawsuits from injuries that happen on the job. Okay, so workers' compensation policies are required by the state of Connecticut and pretty much every other state, with some nuances here and there. One of the coverages that I strongly recommend for anyone that has employees is employer's liability insurance, or an EPLI program. And what that does for you is it provides you protection in the event that you are sued by an employee. And this is one of the fastest growing areas of insurance claims and lawsuits that exist today. So it covers things like claims of sexual harassment, wrongful termination, discrimination on the job. So even if those things are not true, even if an employee or a former employee is saying these things, and you don't agree with them, you don't think that this is true, you can still be sued and still have to cover the cost of defending yourself. So that's where your employer's liability policy is really, really important, because it's going to provide you with up to the limits of your policy with defense costs. So this is a really important coverage that I urge anyone who has an employee or more to consider. Fastest growing area, one of the fastest growing areas of lawsuits in the United States. So these blue ones, those have to do with having employees. If we go down here, these are more of your liability policies that are specific to the nature of operations and the industry that you're in. So professional liability, also known as errors and omissions insurance, is a policy that protects you in the event that you are sued by one of your clients for negligence, an error in their work, or not performing up to contractual standards, which can happen to anyone. And similar to the employer's liability policy, excuse me, it doesn't matter if you did anything right or wrong, honestly. You still have to pay to defend yourself. The average cost of defense in these types of lawsuits can be up to $100,000. So this policy will kick in and cover the cost of defense up to the amount of insurance that you've bought to defend you against any of those claims. And then also within the limits of your policy to cover anything that you're ordered to repay should you be found liable in those lawsuits. So again, if you're providing any kind of service, any kind of advice, anything like that, you need a professional liability policy. This is really, really important to understand. I have a lot of clients who are working as coaches or consultants or advisors who do not have a professional liability policy in place, and you 100% need that. I can't stress this enough. Professional liability is a growing area of litigation in the United States. And even if you're amazing at what you do, somebody can come along and be unhappy with the work that you've done, and you can find yourself involved in a lawsuit. This is really, really important. So professional liability policy, if you're providing any advice, so coaches, consultants, tax advisors, accountants, insurance agents, attorneys, anyone who is giving professional advice or consulting, holistic coaching, health coaching, they all need professional, you all need professional liability policies. This is a really important coverage for you.
Meredith, it would seem to me that this is an area that, it's one thing to have the black or white nature of a defective product, right? Or somebody slipping and falling. But professional liability, I would think, could be, there's a lot of gray there, which is probably why it's an area that's pretty ripe for lawsuits. That's my suspicion, which is why it's so important to have coverage. We do have a question on this topic from Judy. It's in the Q&A button. Judy mentioned that she's having a hard time getting policy. She's got an education service business, and all the insurers she's contacted either do not provide it or will not cover it at a high enough coverage that satisfies potential clients. Any advice for Judy?
Same advice that I had for Priscilla. I'm sorry, but let's talk, because it really is a depends kind of thing. So I'm not really sure, again, without knowing the nature of your operations, without knowing if you're working with children in person, not working with children. So there are a lot of nuances in this type of area that we need to know about in order to know where to go to look for coverages for you. I don't want to get too insurance speaky for anyone out there, but if you're trying to do this on your own, you are working with children. So that's a whole different ballgame. So now we're involving kids and families. And so I just need to know more about that. Without getting too insurance speaky on you guys, if you're doing this on your own and you're trying to find your own coverages, I strongly suggest you reach out to someone with a professional liability experience like our firm. We specialize in placing professional liability risk. This is not the type of coverage that you're going to be able to do on your own on the internet, direct. And we'll go over those options in a second, because it's very specific. And so I don't want to bore everybody, but there are different options outside of the standard markets that we have access to that will probably underwrite this risk. But again, like I told Priscilla, it's a matter of the cost. So we'll want to evaluate with you the cost versus the coverage versus your budget to make sure that it all fits together and you can keep getting the jobs that you need to get contractually. Okay. But we will help you with this. I just don't have enough information, and it's really hard to do in this type of forum that way. But reach out to someone, even if it's not us, reach out to someone who's an expert in professional liability. That's the best advice I can give anybody. The other thing is there are places you can go online and you think you're getting the right coverages because the numbers look like what they're supposed to look like in your contracts. But a lot of times I read those contracts for my clients and you have no coverage because it's the wrong class of business. They've issued you a policy that's not going to cover a loss because they've issued it in an industry that you're not actually a part of. It happens all the time. So be really, really careful if you're doing this online. In fact, don't do it online is my best advice for you, because it is a complicated class of, it is a complicated risk. It's not renting an apartment or something like that. It's pretty easy. I'm sorry I couldn't be more specific on this, but we need to talk about it. And on that topic, professional liability, as I said, there are special carriers that only do professional liability risk that we work with. So not everybody has access to them. So that could be another issue. Maybe some of the people you worked with in the past didn't have access to the same markets, same carriers. Okay, so professional liability and general liability, they're like peanut butter and jelly. This is how I explain this to my clients. Those two coverages provide a broad level of protection from all different types of lawsuits. General liability is more physical physical issues. Somebody bodily injury issues is the fancy way of saying it. Somebody gets hurt, or you say something bad about a competitor and it gets back to them and they sue you, which is like libel and slander, that type of thing. General liability covers those things. And then professional liability fits together with it really, really well and covers you for the financial losses that a client says you may have caused them. Okay. So you're an accountant, maybe you don't file the right tax form. Maybe it cost them $5,000 more in taxes that year. That sort of thing. Those two coverages fit together like a glove. They're meant to go and provide the largest breadth of liability coverage that exists. Okay. Product liability is similar and also works with general liability, but as you were saying earlier, product liability revolves more around your manufacturing, selling, or distribution of products that then are deemed unsafe or unhealthy or have a defect or injure someone. There's a variety of things that go into there, right? But just like professional liability, product liability covers you for claims that products that you have otherwise distributed or created have caused losses for people who have bought them. Same thing. Cyber liability, everybody needs this. I can't stress this enough. Cyber liability protects you from the liabilities and financial losses associated with electronic, digital hacking, ransomware, a variety of different trends that are going on right now in terms of data breaches. So a lot of my clients will say to me, I don't need this because I don't actually store client data. Well, that's not true either, because if you're using Stripe or PayPal or any of the other payment methods to receive payments from clients, you are liable if they get hacked and your client's information is stolen. Those contracts definitely indemnify Stripe and the others. So the responsibility will find its way back to you one way or another. So any type of electronic data breaches right now, small businesses are extremely exposed to. In fact, hackers, ransomwares, digital, I learned this term the other day that I thought was funny, interesting. What are they calling them? Digital gangsters, digital gangs, like literally gangs, rings of people that are working collectively all over the world to hack into small businesses and steal information, hold it ransom until you pay them, things of that nature. So there's a variety of these terrible attacks going on, and small businesses are primed for this because we're not as secure. I mean, if you think about it, last year, hospitals all got hacked, education systems all got hacked, and those are some of the most secure organizations in the world, right? So clearly our small solopreneurs or 5-person businesses are not as secure as some of the best institutions in the world. So we're kind of easy prey for this, to be honest with you. It's not, it's the truth, and we're big targets for it. Most cyber liability claims arise from human error. They're not even hackers generally. There's someone in your organization who clicked on something they shouldn't have clicked on, and then gave access to someone outside of your organization to all of the different exchanges, whether they be email exchanges or data exchanges that exist. So, sorry. So there's a variety of ways these guys are getting in. Cyber liability will protect you from the financial costs associated with these types of data breaches or ransomware attacks. Those are the two highest. When you are attacked and confidential information is stolen or client information is stolen, you are legally responsible in the state of Connecticut for meeting certain regulations associated with those attacks. So you have to notify all of your clients. You have to set up identity theft monitoring for them. There's a variety of things that you're required to do. It ends up costing like $500 on average per record that's stolen. So if you think about the cost of that and you think about the headache associated with trying to implement a program to fix it and to meet the requirements after something like this happens, a cyber liability policy becomes really, really important for you. The insurance company will make sure that all of those requirements are met. They will notify everyone. They will do all of the forensic research necessary to see how they got in and try to help you prevent them from getting in again. Very important coverage in today's world. I'm going to pause there for a second. Do we have any questions on the liability sections before I cover my last thing on the coverages?
It's not a liability question, Meredith, but there was a follow-up question about the replacement cost concept we talked about earlier, and just how does one come up with this, replacement cost figure in order for the agent to extend the appropriate coverage limit?
Your insurance agent does it. Your insurance agent has what's called a replacement cost estimator tool, and every carrier that they work with has their own tool that uses it. So what we do is we plug in all of the information that the tool requires, and then it tells us based on the standard, what's going on in the marketplace, the standard cost of tools and supplies and different things of that nature, how much it would cost to rebuild that building. There's a lot of other things that go into it too, like ordinance of law, how updated are the systems, all of that type of information. So we plug all of the factors in and it gives us the replacement cost factor.
Great. And one more question on the professional liability and cyber. Annette asked, what's an average cost for a sole proprietor to cover professional and cyber insurance?
There is no average cost. It's going to depend on the industry. I know it sounds so terrible. I wish there was, but it's going to depend on the industry. It's going to depend on all of your risk factors. I can tell you on the cyber insurance side that what I'm seeing right now for the quotes I just did, it's between $900 and $1,100 for really pretty comprehensive coverage on the cyber side. The professional liability side is too complicated for me to be able to even give you like a ballpark on that. It's going to be based on the size, your experience, and where you're at. Formulary relationship between replacement cost and coverage. Yes, there is. So your replacement cost is going to be the determinant for your coverage A, if that makes sense. It's coverage A plus some amount. You China, hopefully that helps you. Let me know. But yes, so your replacement cost without your contents, that's just your building, is going to be your coverage A. That's the minimum that you want it to be. I know that we're waiting on a question.
Yeah, it looks like Ramadan has a question. I'm going to see if I can. So I should have just unmuted your microphone there. If you want to unmute yourself, you could ask your question.
Hello, can you hear me?
Yes, we can.
Yeah, thank you very much for such a wonderful program. We appreciate it.
Oh, good. You're welcome.
I do energy efficiency studies on commercial and industrial facilities. So I am the one who markets the program, and I conduct the energy study to identify opportunities for my customers where they can save, present them with a report, showing them the estimated cost, estimated savings, and payback. If the customer is interested in moving forward, I switch hats. I hire mechanical and electrical contractors to implement the recommendations I recommended for the customer. Now, should something go wrong with the installation, I do require the subcontractors to have coverages, liability, and so forth. But am I, in case if a customer sues, would I be a target or?
Yes. Yeah.
Okay.
So, so the best way that
might be.
No.
might be
I'm
more
just, it's a
complicated, but-
constant, I'm chuckling because it's a constant question that comes up, and I'm laughing a little bit to myself because I'm trying to figure out the most non-offensive way, not offensive to you, but just like offensive in general. America is a very litigious society. And what, in my experience, the lawyers for your clients, like the people who end up suing you, are going to go after anyone who has, or they believe has, the ability to pay. So regardless of whether or not you would be held responsible, like if you went to a civil suit and got in front of a judge and a jury and all that, it's irrelevant. What they really want you to do is settle before you get there. So they'll come, like, I'm not a lawyer, but I've been in a lot of these claim situations. So anyone who can get sued will get sued. And it's almost not even, it almost doesn't matter as much whether or not it would be held up. What's going to matter is whether you have the cost to defend yourself or whether you settle. And they're going to hope that you settle for that and pay just to not have to go through the lawsuit. So my advice to my clients always is, if you can get sued, I mean, if there is a lawsuit, just count on the fact that you'll be involved in it. Let me give you a really good example. It's similar to what you're describing. It's a different industry. I was involved with a claim. I was actually an expert witness for a claim that was in civil court. There was a transportation company based out of New Jersey who contracted a local trucking company in Holyoke, Massachusetts, to fulfill deliveries for them on their behalf. That trucking company, there was an accident. They killed a pedestrian. It's a subcontracted out. Everybody got called into civil court because the question is, did the company, the New Jersey trucking company who hired that sublet, sub that work out, did they go through their due diligence and have a process in place to properly vet that company in Holyoke? Or did they show negligence in their hiring process?
Mhm.
So everybody got involved in that lawsuit.
So
That
it's a
makes sense?
double, I'm sorry. It's
Yeah,
good
no,
to
I just,
double insure.
yeah.
Make sure my subcontractors are insured, then at the same time, make sure I carry the same coverages because I
Yes.
might be okay.
Yep. The other issue too is that a lot of times I see this a lot with contractors. A lot of times contractors will get the certificate of insurance that they need just to be able to work with you, and then they'll cancel it. So I've run in a lot of situations where, like for instance, this just happened with a drywaller, where my client collected the certificate of insurance before the start of a job. So they had active insurance, but then they canceled it a month into the job and there was a loss.
Wow.
They do that to save money on their premiums.
Yeah.
So
Okay.
so it's you have to make sure you have, so there's other things outside of insurance that you can do to lower your liability. That's what I do, risk management. So you have to make sure that not only are you collecting the certificates of insurance, but you have a process in place to validate them periodically so that you can show you are doing your due diligence in this case, right? The process and your ability to document the process will be important.
Okay. Thank you very much.
All right.
Yeah, no problem. And
Thanks
we
for
can
the
help you with
question.
that too.
Okay.
Thank you for the question.
Yeah. Any other questions just on these coverages pieces? There's a lot to dig in here. The last thing that I do want to say is, as business owners, we have a responsibility to, especially if we have employees and families and things, but we have a responsibility to make sure that the business could be taken care of in the event of something happening to one of us, or even for ourselves, right? Like if we are the primary contributor in our household, income contributor in our household, or any income contributor in our household, we need to think about what would happen to the business or to ourselves if we weren't able to work in it for some period of time, or God forbid, if we were to die. So there are insurances that you need to consider for continuity purposes in your business, meaning the ability for the business to go on. So key man insurance, which is a form of life insurance, is something that some banks may require if you're getting financing, that sort of thing. But you need to think about having disability and in particular life insurance in place because you have an asset now, right? So those are things that you need to make sure you consider. You should also consider offering all of these insurances to your employees because it's going to help with your talent retention and your talent attraction strategy. And it's going to help keep everybody healthy and happy that works for you, right? These are important things, all things that we work on with our clients. But in particular, if you're a CEO and you're the main contributor to your business, really please get life and disability insurance. It's really important because I've seen businesses fold up and close right in the middle of a health crisis for their owners. And that's you don't want to be facing that situation should it come up. So it's really important that we talk about that. And then lastly, your personal insurances, so your homeowners, your tenants, your auto policies, they all should work in conjunction with your business insurance policies. So most insurance agents don't take this stance, but we do. We need to see all your policies. We need to make sure they all go together, that they all work together. Okay, so consider your personal insurance policies part of your overall insurance program with your business, okay? All right, so I'm gonna hop out of here. I'm just gonna give you guys a couple of scenarios and ways that these insurances work together. Okay, so here's one scenario. So the service provider. Coaches, consultants, photographers, advisors, we were talking about these earlier. Typically, you're one person company, maybe you're scaling, but a one person company providing advice and services to others. So you could be a catering company, even though you're in the food and beverage industry, you're providing a service. Okay, so just keep that in mind. Typically, these types of clients for us, at least at the startup stage, are working out of their home or in remote locations with no formal office space. So maybe one day you're at a coffee shop, or maybe one day you're working from a client's office. You're sort of, I like to call myself a digital nomad. Like I go all over, I go wherever I need to go or want to go that day. So you're kind of roaming around, but you don't have a rented space is essentially what I'm saying, or a bought space. Your business property is typically minimal. So most of us coaches, consultants, and photographers we're using our computers. And if we're a photographer, we're using special photo equipment, but we're not like a restaurant where we have special cooking equipment and, industrial ovens to deal with and coolants and refrigerants and all that stuff, right? We're basically intellectual property people. What we're selling is our mind and our services for the most part. Okay. Minimal travel for on-site work. So what I say about that is it's like any other job. You go someplace, you come home. You're not making deliveries necessarily yet, or have consistent driving for business purposes. Okay. For these types of businesses, really what you need is general liability insurance. And this is a general speak. Again, I need to talk to you to understand what you're doing, but generally what you're going to need is general liability insurance. So protection in case someone gets hurt while working with you, or you damage the property of others, or in the case of like libel or slander, or also copyright infringement, there's some coverage for that in your general liability policy. You certainly need professional liability policy. We talked a lot about that in the last slide. You're providing advice, protect yourself, right? And as I mentioned in the last slide, everybody needs cyber liability, and everybody should be considering life, disability, and health. But this is a fairly straightforward risk. It's mostly a professional liability risk with some third-party lawsuit risk on the general liability side, right? So these are the coverages you really want to make sure you have bare minimum if you're doing this type of work. If you are like a photographer or someone who has some specialized equipment, we're going to need to write that like on an inland marine policy or, a separate property policy if necessary, but we would uncover that with you as we discuss your insurance needs when we talk to you. Someone like me wouldn't need property insurance really, because I just have my computer. Okay. Hopefully that makes sense. The big risk here is the professional liability, the cyber liability. But those are the four main types of insurance I would consider if I was just generally talking about a service provider. Are there any service providers who have specific questions on these? Let's see if there's anything in the chat here. Out of curiosity, let's say my coverage limit on the professional insurance is $100,000 and I get sued. How much should I settle for? You don't come up with the settlement amount. The insurance company handles all of that for you. So let me read the question out loud to everybody. On the question the previous participant posed, out of curiosity, let's say my coverage limit on professional insurance is $100,000 and I get sued. How much should I settle for? Is it going to be the entire coverage limit or up to a certain amount? So you're not going to determine how much you settle for. The insurance company's lawyers will help you with that. That's not a decision you need to make. You need legal representation on that. As far as like the coverage limits, it's set out in your policy. So if you read your insurance contract or you have your insurance agent help you with this, they'll be able to tell you what your defense limits are versus your overall limits on your policy. Some policies have defense and settlement limits built into the same coverage limits. Some do not. Some have defense outside of settlement limits. So it really depends on the insurance coverage that you have in place, the contract. It always goes back to the contract, how the insurance company wrote it. Okay, hopefully that helps you. Okay, I think we covered those ones. Okay, so those are the four basics of the service provider that I would recommend. Make sure you have in place. Okay, now let's say you're a bakery. This is a different type of risk. You can also put like cafes, restaurants, some levels of retail into the same category, but now it's a little bit more complicated, right? Because you have a physical location. People are coming in and out of that physical location. You likely have help. You're probably not running this thing all on your own, whether it's full-time or part-time help. There's people there with you. You likely offer a variety of different types of services. So in addition to like a walk-in bakery, most of my clients also offer something like catering or custom work. I work with a retailer who does, invitations and stationery, and she sells cards and all the things in the store, but she also has custom corporate contracts that she works on. So someone like me might want to do custom thank you cards or custom Christmas cards. She does that type of work, or wedding invitations. That's an additional type of operation that's outside of just the bakery, right? That makes sense, or outside of just the retail store. So oftentimes they have a variety, these types of people have a variety, business owners have a variety of ways that they're working and income streams. Like I have a cafe right now who also has DJs play, who also sells merchandise, who, so they're doing a variety of different things. Each of those new things that they do outside of just serving the customer coffee is a new risk that they're facing that needs to be insured for. Oftentimes these types of clients perform some sort of delivery, whether it's to other stores, maybe someone else distributes their bakery products for them, or to other businesses such as catering, that sort of thing. And likely once you're in a physical location, you have some level of special equipment, stock, and or inventory that needs to be insured. So it's not just about like the building itself, it's about all the stuff in it. It's about your inventory. This time of year, my retail clients have an extra $100,000 of inventory, right? Because they're all selling for the holiday season. That's something that needs to be addressed in your insurance program, that fluctuation in inventory. If you only insure the type of inventory that you have in July, what if something happens in December? You're not going to have enough insurance to cover your inventory. So we need to talk about those things, part of your insurance program. So these are the minimum insurances that we would want to talk about for this type of business, which is property. We discussed this before, business interruption, general liability. You have people coming in and out of your store all the time. That's a real risk. Okay. Professional liability, commercial auto, because now you're performing deliveries. You have employees now, so you need to talk about workers' compensation coverages. You have employees, so you should consider employee liability coverages. You're doing things electronically, whether you have an online store, online ordering, online delivery service, you're using credit cards in your store, you're probably using a POS system that's on the internet. All of those things open you up to cyber attacks. You 100% need to get a cyber liability policy. And then, of course, all the things that we discussed on the personal side to make sure that your business can keep running. And that you may want to offer your employees as well in the form of disability, life, health, and personal. But I give you these two examples just as a way of showing as your business grows and changes, so does your risks. So do your risks. They change by industry, but they change by stage, they change by location. So it's important that you're constantly reevaluating what you have in place, at least annually, in terms of your insurance program to make sure that it's kept up with the changes in your business. And work, hopefully working with someone who can help you with that. Okay, so last thing, and then we'll go to general questions. So you have an idea of what the general insurance policies are that you may need. We did a real life, easy to understand overview of those coverages. Where do you go to get it? So you have a variety of different options in terms of buying insurance. You have direct writers. So direct writers are, they're essentially the insurance companies. So you could go to the Hartford and you could go online and you could work with either someone at the Hartford or just online to get an insurance quote. That's called a direct writer. You're just getting a quote from the Hartford. It's just what they sell. And the person selling it to you works for the Hartford, like they're an employee, right? You could go to a captive agent. A captive agent is an insurance agent that is contracted by a carrier, like Allstate is a great example of this, that represents just that one carrier or just a small amount of carriers. They're contracted and captive just to that one carrier. Allstate's a great example, State Farm, all of those guys, those are all captive carriers. You could go to an independent agent, which is what we are. So we represent lots of different insurance carriers. We work with our clients to navigate which ones are the best and to find them coverages where they need coverages, right? So we have lots of access to lots of different carriers, and we're an independent business. We're not owned by or paid directly by, as an employee, directly by a carrier company. And there's pluses and minuses to all these different things. With a direct writer, you may be able to save a little bit of money because they often are online. It's more efficient. It's less human contact. Geico is a really good example of that, right? You can call, you can work with Geico directly. So you may be able to save a little bit of money that way. The downside is you may not know what you're getting. You may not know that it fits exactly what you need. And you also may not know that it's a competitive rate necessarily, right? So you're going to really have to do a lot of legwork in terms of figuring out the best carrier. You're going to have to go to multiple carriers to get multiple quotes. That's going to be your job. You're going to own that when you work with a direct writer, okay? Similar challenges with a captive agent, right? They're going to help you really navigate your needs, but they only have access and knowledge of the carrier that they're contracted with, okay? So you won't really know necessarily if there's better coverage for you out there, better rates. You won't really know. It's your job then to go and find that. Independent agents are great because we're going to do a lot of that legwork for you. We're going to show you multiple quotes. We're going to talk to you about your coverages. We're going to keep in touch with you annually to make sure you have the right coverage, in place. Or even I talk to my clients all the time. They call me all the time. Hey, I'm thinking of doing this. I'm thinking of buying a truck and whatever, So we're there to talk you through those things and help you with those things. And we can provide you with access to lots of different carriers the same way. I think the downside to a traditional agency is maybe they're a little less technologically advanced. We're not. We have a client portal. We're set up to do business completely online or in person, however you want to do it. But I think if there was one downside to an independent agent, typically that's usually what people would say, is that they're maybe a little less modern in terms of the technology that they offer you. So variety of different ways you can find insurance, variety of different ways you can interact with insurance professionals. It's really going to be what's up to you, right? It's really going to be how you want to interact. Most of our clients work with our firm because they like that we care about their business. They like that we know their business. They like that we can help them with risk management and contractual obligations. So it's really for them, it's more about the peace of mind and knowing that someone's there who cares about their business and knows their business. Whereas if you're going to a direct writer, you're just going to be a number. You're going to get whoever answers the phone. But again, it could be more efficient. It could be a little less costly. Pluses and minuses to everything on the list. Okay, with that, let's talk about questions. Are there any open questions?
So we have one open question in the chat, and we'll do a last call for questions here because I know we're a little bit over here. Uchenna had a follow-up question on the litigation discussion. I guess you could read it there if you want. About who pays for the insurance.
Yeah. So typically you don't have to hire an attorney at all. Oh, my contact, it's going to be on the next screen here. Hold on. You don't have to hire an attorney at all. In fact, the insurance company would prefer in most cases that you don't, because they're going to start the process with their lawyer right away. So you're not responsible for getting a business lawyer if that's part of your insurance coverages. You don't have to worry about that at all. Hopefully that makes sense to you. If you did have your own attorney, I have seen situations where that happens. The two work together, but it makes it more complicated. It's always easier to report the claim first thing to us and your carrier, and then take it from there. Okay, all you have to do is scan this. You guys can scan this with your phone, and all my insurance information or all my contact information will pop up for you and save to your contacts. We're also in all these places on social media. We're very big on LinkedIn. And a little behind the scenes on Instagram. So you guys can follow us there as well. This is probably the most lively insurance conversation I've had in a while. Thanks, guys, for participating.
Great engagement. Thanks, everybody. And I'm not seeing any other questions in the chat or in the Q&A section. So I think we'll wrap up from here. Meredith, this was outstanding. Thank you very much again for providing all this valuable information. And I'll let everybody know that Meredith also taught a webinar on risk management that we did together probably a little over a month ago, which was fantastic. If you are interested in that, you can find a recording of that on the YouTube page for the Greater Hartford chapter of SCORE. So you can just go to YouTube, search SCORE Greater Hartford. You'll find our page there, and a recording of that webinar is available. And you've got Meredith's contact information here. And if you're interested in learning more about SCORE, sign up for mentoring services, you can do that at score.org. And I think with that, we'll wrap up. Thanks again, everybody, and enjoy the rest of your day.
Bye, guys. Thank you so much. Have a good day.
Thank you.